Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we're going to do a little bit of stock talk, watch the ticker a little bit, but primarily the goal of this video is to narrow down the list of all the companies that GameStop might be interested in acquiring, particularly if we expand using the information that we learned in the 10K, which gives us a pretty solid range of market cap of company that we might be talking about, as well as one of the quotes or inferences from the Wall Street Journal article that came out in January, which is that perhaps it's a consumer company, but not necessarily a brick and mortar retailer that GameStop is interested in acquiring. So we're going to look at all the names and kind of talk together, discuss who the acquisition target or targets could be. So far, my opinion, as the homepage video on my channel makes clear, since February 2nd, my top target, my most likely target has still been Target. And there's some fun speculation over the weekend of on Google Maps, if you were to search GameStop, that it would show as Target stores would show as having a GameStop store within them, but also apparently Walmart stores did too. So maybe it's a nothing burger, maybe it's another little tea leaf of perhaps I've been on the right trail all along. But regardless, in this video, we're mainly going to talk what other companies, what consumer companies that we haven't talked about yet, maybe some that we have, but I haven't given a fair shake, could we talk about as the potential acquisition targets. And welcome in the chat, Benjo, BK, and Clark Kent. It's great to see you. Before I get into everything, I did just want to say thank you to those that have commented, that liked the video. Thank you for the subscribers. We are scaling Mount Fuji together. 3776 is the altitude of Mount Fuji. If you want to be a part of the Pokey Sub Club, there's about 500 spots left. Would love for you to be a part of it. And also thank you to those who have joined the channel as fans and as friends. If you want to invest in your understanding of your GME position, consider being a friend of the channel and having access to the best GameStop spreadsheet in the world. So that said, what's this over here? Let's get rid of that tab. Pretty fun day on a Tuesday for GameStop, for the warrants, and ultimately for the markets overall. So you got to enjoy that. Clark says it's live. If and when I pull a loon, I mean, I will pull one eventually. It'll definitely be live when I pull it. I'm still trying to persuade my wife and myself that a $2,500 pull is a good idea. So we'll see how that goes. But man, been enjoying a Green Tuesday. So let's talk about some of the things that we know as it relates to GameStop's acquisition target. So generally speaking, durability of whatever it is that GameStop acquires matters a lot. The expertise that Cohen is bringing in is related to cost cutting and operating efficiency. So you want to look for companies that potentially are not incredibly efficient. He's looking for a diamond in the rough with a sleepy management team. So you're looking for perhaps a undervalued company and or a company that their stock has not performed particularly well over the past 1 to 5 years. And as it relates to the size, Cohen said very big. Well, we have a little bit more intel on what very big means, because in their 10K filing that they filed last week, and you can dive into the channel on my video, well, whatever, the video on my channel that talks more about it. I don't have it pulled up right now, but the $700 million collateral for the derivatives position is a huge clue as to the size of the acquisition that GameStop might be interested in. Another huge clue is that they said on the 10K they are leveraging cash and debt and equity for this acquisition. given the fact that right now GameStop has 9.4 billion in cash, I think the minimum market cap of what GameStop is looking to acquire is 10 billion, most likely 20 billion plus. So that's one of the barometers we're going to look for is, hey, the market cap needs to be at least 10 billion. And it still needs to be consumer in some way, somehow consumer facing, not a primarily, business to business distributions company, right? And now what's the upper threshold of what GameStop could buy? We'll talk about that in a second. I want to say hi first in the chat. Baby UFO says it's obviously not Best Buy. Clark Kent, $2,500 investment is what Lunar Packs would be. Baby UFO thinks it's AMC. Unfortunately, AMC is way below the $10 billion market cap, so it will not be getting love on this video. But I have talked about it in past videos, and I've been consistent that I do not think it's AMC. And it's even less likely now based on what's come in the 10K. Okay, hopping back over to some screener. Baby UFO, I don't understand your comment. The market cap doesn't need to be 10 billion. There's debt to consider. Yeah, ultimately, it doesn't matter how much debt a company has. Like Baby UFO is saying, hey, AMC, it has so much debt, so it could be AMC, right? And the thing is, you don't have to pay, you don't pay when you buy a company. Let me just get really granular here for a second. We'll pull it up for you just since you're talking about it, Baby UFO. When you're paying for a company, you don't have to pay the debt. You just pay the market cap. Like that. I mean, obviously you'd have to pay some type of premium if you're acquiring it. But what I'm saying is GameStop could use cash in the bank right now. How much do you think it would cost to buy AMC? Do you think it would cost 600 million, 800 million, $1 billion, $2 billion? Do you think that AMC would only sell for a 4x return on their current market cap? Even if it costs $2 billion, why would GameStop be selling equity for a $2 billion acquisition? Why would they be raising more debt for a $2 billion acquisition? Why would they be leveraging their cash with derivatives for a $2 billion acquisition? They just don't need to do that because they have $10 billion already, right? So for all the other reasons why AMC particularly is unlikely, I did want to give this a little bit more light just so y'all understand why I am saying that 10 billion, in my opinion, is the minimum as far as the deal, the cash outlay or the value of the business that GameStop is acquiring. If for nothing else, then again, the statement of very, very, very big should be enough of a tell. But before we had the 10K, we could have said, well, there's some things are big, like they have a lot of stores, or some things are big, like the brand is big, or it would be, like one thing I talked about was Six Flags in one of my first videos. Like Six Flags is big, like the physical geography of the properties are big, but we have a lot more clarity through the financials now that he really is looking for a $10+ billion target. If you disagree, then you are allowed to disagree. Bobby Joe says, I don't know why GME has to buy consumer-facing companies. So, and It's Me BK wants to know if we can buy Walmart. So we'll get into what's the upper threshold here in a second. The consumer-facing company. So GameStop doesn't have to buy a consumer-facing company, but both articles framed it as a consumer company. So you would have to say that both articles are making a false assumption or being intentionally misleading. I think that's a little bit of a stretch. Beyond that, you also just have to think about what is GameStop's operational expertise? What is Ryan Cohen's expertise? Right? And when you think about Ryan Cohen, he has always operated consumer companies, from obviously Chewy to GameStop, but even companies he's invested in, from Wells Fargo to Alibaba to Nordstrom's to Bed Bath and Beyond, every company, Apple, like that he's publicly associated with, he has there's a consumer facing element to the business. So it it doesn't have to be, but if they're using their operational expertise and Ryan Cohen is the one leading the charge, and both articles say it's a consumer or retail company, and even this quote, there are a lot of diamonds in the rough that have sleepy management teams. This quote is attributed to Ryan Cohen talking about the retail industry, right? So it probably is retail, in my opinion. Today in this video, we're going to scope out a little bit further and say, let's just think generally consumer and maybe not just a traditional brick and mortar retailer. Great question, though. So let's talk about what the highest market cap is that GameStop could buy. Obviously, they're raising debt, they're selling equity, they're raising and leveraging cash. I do not think so. Before I just say what I think, let's also think about Ryan Cohen's compensation. This long-term performance award is related to an eventual market cap of 100. Ryan Cohen is aiming towards dollar enterprise, and his compensation is structured around that. I think personally, it's very unlikely that GameStop is going to buy a company that is already worth more than $100 billion. If this is the upper band threshold of his compensation, how is this justified if he's going to buy his way there? Also, the dilution, practically, if you were to buy a $100 billion company and you currently are a $10 billion company, the dilution effect of a 11 to 1 or 10 to 1 dilution is crazy, right? And so for GME investors, GME holders that have been holding for 5 years, to only end up with 10 or less than 10% of the holding company would be pretty difficult for investors to swallow. So I think practically, strategically, 100 billion is a pretty solid upper band. There's also just financially, like with as much debt as you could raise, as much equity as you could sell, as much cash as you could leverage, can you really get to over 100 billion? Even if they wanted a $200 billion company, could they really get a $200 billion company? And the more valuable the company, you also have to think about, why would that company want to sell? You know what I mean? And so is it really going to be likely that a company that's worth 200 billion wants to sell itself to GameStop, right? The higher up you get, the less likely it gets. And so for all those reasons, I think a $100 billion market cap is, generally speaking, the highest band worth considering as far as an acquisition target from GameStop, which knocks off Apple, Google, Microsoft, Amazon, Meta, Tesla, Walmart, like all these companies that you think, okay, that's consumer. It's like, yeah, there's just no way that these companies are in play for GameStop to acquire. And that include, let's see some other companies that knocks off the list, just so y'all can see. So like Visa, Johnson and Johnson, JP Morgan, MasterCard, Costco, Netflix. What else is consumer in some way? Bank of America, P&G, Home Depot, Coca-Cola. What else? What else? What's consumer? What's consumer? Toyota, Phillips Morris, Wells Fargo. What else we got here? T-Mobile. Some more banks. Pepsi, Verizon, American Express, AT&T, Citi, TJ Maxx, Salesforce, Disney, Schwab. I don't think any of these companies are in play. Shopify. What else we got? Here's another page, another 50 companies that there's just no way. Lowe's. What else? Most of these aren't even consumer at this point. Sony, Intuit, UBS, Capital One, ServiceNow, Dell, Starbucks, Constellation Energy. And now here you go. You're officially under 100. So at the very, very top of the threshold, you are at Spotify with a $99.79 billion market cap. Now, if we just add that to the screener, say, show me companies over 10 billion. Can I add another market cap threshold? No. Okay, between 10 and 100. Here you go. Okay, 100 billion, you crazy. There's 737 stocks, period, that are within this band. So we're going to keep narrowing it down and take a look at what's most likely, and we'll keep whittling it together. Before I keep trudging along, let me say what's up again in the chat. What's up, Human? Hey, Human just passed his Series 65, and now he's getting a Series 7. Congrats, bro, on your path to being a financial advisor. Carl Imbetin. So some people are asking about SoFi. I'm gonna keep whittling down this list, and then we'll look at what companies fit within the list. So SoFi might get a look by the end of it. What is their market cap? Let's see if they end up being within the range. Let's see here. Yeah, they're at a 20 billion. So we'll end up taking a look at SoFi. I will say though, price to earnings of a 40 is huge. That's very high. Even for fintech, that's huge. And there's not that much tech in SoFi's fintech, in my opinion. So I don't think it's SoFi off the cuff. But let's whittle it down and see what the total hypothetical possible list even is. What's up, Spoon? Great to see you. What's up, Raw Dare Burgess? I did see it. I did see that Google Map thing. It's pretty fun. Yeah, some Grady asked, do you think the acquisition is going to turn into another turnaround story? Like, it might be worth asking what companies in the market cap range are disliked or have some hair on them. To me, I'm mainly looking at the valuation of the company, and that's the easiest way to decide if it's disliked in terms of earnings multiple, but also brand too. Like, yeah, if you're picking a darling company that everyone thinks is amazing, like maybe SoFi is that company. I don't know. But whatever company that you're like, oh, this is such a great company, and then you look at it and it's like, oh, it's got like a 60 PE ratio. It's like, well, great. Like everyone already thinks that's an amazing company. So like it's not a diamond in the rough. It's not sleepy. You know what I mean? So yeah, we will narrow down the list once we get to the list for sure. But first we want to get to the list, which right now it's 737 stocks. Let's see if we can whittle it any further to get this a little bit more practical. So what industry, what can I choose here? I think biotech generally is not. No, is there any way biotech is consumer facing? Any of you guys think biotech is consumer facing? Wow, Human Made, thanks, man. Human Made says I inspired him to pursue becoming a financial advisor. That's awesome. Like I don't think it's a shell company. Like banks are consumer, software, sure. Medical devices could be consumer. Capital markets, drug manufacturers could be consumer. Aerospace and defense, I'd say this is not a consumer company. Asset management, I mean, I guess you could, but really asset management companies are like institutional companies. Any companies that sell to businesses are not going to be consumer, which all of these will sell some to businesses, but like oil and gas exploration. Okay, does Shell have gas stations? Does Chevron have gas stations? Yeah, there's a tiny part that's consumer, but the lion's share of the company is not consumer, right? So it's like it's probably not worth super intensely for this purpose looking at oil and gas exploration. Of course, in a hypothetical, yeah, you can always have fun and say, well, what if it is, right? But we're going to try to actually think about what it really is. Machinery, probably not. Internet, sure. Semiconductors, not consumer facing. IT services, it's not really consumer facing. Food definitely is. Sure, more medical supplies. I mean, it's probably not medical, but fine. Chemicals, no way. Midstream, no. Engineering and construction, no. Telecom, sure. Auto parts, maybe. Restaurants, credit, entertainment. Electronic components, probably not. Metals and mining, probably not. Gold, medical facilities, not really. I mean, whatever. Fine, we can include them, but probably not. Specialty retail, there you go. Health information services, maybe. Parts for electrical, no. Real estate services, maybe. Insurance is probably not. Equipment, probably not, but we'll include it. Specialty business services, no thank you. Education and training, sure. Utilities, maybe. Ad agencies are definitely business. Mortgage, REITs are not. It's definitely not a REIT. Computer hardware, no thanks. Shipping, no way. Retail, there you go. Buildings, no. Furniture, sure. Leisure, yes. More apparel. Tech instruments, no thanks. Household products, yeah. Logistics, no. Semis, no. Auto manufacturers, yes. Dealers, sure. Conglomerates, maybe. Farm machinery, no. Packaging, no. Manufacturing, no. Consulting, no. ID, no. Utilities, no. Steel, no. Security, no. Rental, probably not. Solar, probably not. Geez, how many of these are there? So many. Electronic gaming, okay. What else? Travel services, consumer electronics, more banks, resorts and casinos, beverages, airlines. No thank you on REITs, recreational vehicles, footwear, broadcasting, stock exchanges, food distribution. No thanks on the distribution, gambling, grocery stores, lodging, luxury goods, beverages, tools, tobacco, publishing, discount stores, breweries. No thanks on distribution. No thanks on airports and air services. I mean, whatever. If you want to put it, fine. Home improvement, pharmaceutical. We're getting close. We're getting close. Department stores. Great. Paper products. Why not? Any that I missed? Any that I missed? Any that I should go ahead and take off? Let's see. Let's see. These are all consumer for sure. I kind of want to take off a couple of these. But maybe we will leave them for now. They all might pass. Okay, great. There you go. We are down to 337 stocks. Just like that. We went from 700 something to 300 something. Some Grady, I just don't think railroads are consumer. I'm focusing on consumer companies. If you want to say it could be a non-consumer company, then if you agree with my market cap thresholds, then you still have 750 companies that are hypothetically possible. If you don't agree with my market cap thresholds, then you have 5,500 companies that are hypothetically possible. And that's only if you think it's publicly traded, which I think is another thing that, again, the article said, but some people think, well, what if the article's wrong? What if the article's lying? But literally both articles said that. Both articles said publicly traded, and both articles said consumer and or retail. So that's where I'm at. Some Grady says, no, just funnin'. Baby UFO, I'm about to block you from this chat because you keep shilling AMC. Although I really appreciate all the months that you have spent on the channel. I like that you're here. I'm just saying, I literally already gave AMC like a 10-minute block that it didn't deserve in the first place. And I tried to explain to you why I'm ruling it out. And it's okay if you disagree. I even said that too. It's fine if you disagree. I just do not want to see you talking about AMC for the next hour and plus in the chat. It's not the point of this video. Yeah, like Joshua says, with our 10 billion, can we buy a sports team? So that's another great example of like a non-publicly traded company. So yeah, if you want to think more expansively, it's possible. You could definitely buy a sports team with $10 billion. But it is not probable, based on the fact that both articles say he's looking for a publicly traded company, at the very least. So, by the way, supers, if you want to make sure I see your comment, leave a super. It's appreciated, not required. But when I click back onto screening, the chat is like super, super thin, and I don't actually like see them all. Let me go ahead and get medical devices maybe out of here. I don't know. Let's leave it for now. I want to probably start like smaller rather than bigger because, for example, CrowdStrike and Spotify, I'm like, okay, they're not 100 billion, but they might as well be 100 billion. You know, all these companies that are 90 plus, even really like 80 plus, like the odds that it's any of these to me, just based on their market cap, is very low. I do not think they're going to buy these. But hey, if you think that, you know, the Bank of New York Mellon or Mercado or Bank of Montreal or Adobe, if you don't think 80 billion plus is an issue, then you could look deeper into them. I'm not going to look deeper into these for the sake of this live stream because I think 80 is still just too close. When you add 80 to 10, you've got a $90 billion company hypothetically. And I just don't think, again, that we're voting on a $100 billion comp plan for a $90 billion enterprise. However, run GME run. So fun. I think to answer the question in the chat that we would prefer to buy target rather than partner. And the general premise of this video is to look at acquisition targets. But it is possible that that GameStop also has partner targets. So let's start at the bottom. We've got, and just see what stands out to us here. So these in the just over 10 billion, I almost think these are unlikely because they're so small. But it's possible, right? But to me, I think it's much more likely that it's more than 20 billion. So I mean, could we look at every single one of these? Like, what's JM Smucker? The smallest one that just barely crosses over. It's like, okay, it's sleepy. PE's negative though, like they lose money. I do not think Cohen is looking to buy an unprofitable business. I think he wants to buy an inefficient business that's profitable, but once he gets in there, it could be much more profitable. But is this worth a deeper dive for a company that's bleeding money and paying a high dividend? I mean, you could fix some of the issues if you cut the dividend, but then you lose some investors there. And it's, you know, if you buy JM Smuckers, you're not just buying one business, you're buying all these different brands. And it's this food packaging conglomerate. I feel like if the market cap was 20, it's worth looking into. But with the market cap just barely being above 10 and it being unprofitable, I'm like, look, how do you say 10 billion is a steal? How is that a, you know, how do you value it when it's not making money? It's just kind of tough. You know what I mean? It's not exactly super great insider stuff, you know, like I don't want this live stream to literally go for 5 hours. And so some of these companies, I just think, what are the odds really that it's going to be this small of a company if they're doing everything they're doing as far as the size, the implications of the size of their derivatives position, collateral, the amount of cash they have in the bank, equity and debt that they're also looking to raise. I just think 10 bill is probably not big enough. Back to the chat here. Yeah, sorry about if the ads are going crazy on live streams. I just click on it. I don't like say do it a lot or anything like that. It's just YouTube doing its thing. But I do appreciate it, even though it's annoying. I use YouTube Premium, so personally, I do not deal with ads. But if you have to deal with the ads, I do apologize. All the earnings do go to DRS Book GME shares, so you are helping the cause. Anytime that ad comes up, just think, I'm helping the cause. Lock the float. What else am I missing here? What else? Yeah, a lot of people like to talk about not something seen in capital markets. I think personally that has more to do with a GME squeeze and or the implications of GameStop's success that forces the United States to really crack down on naked short selling and on complicit executive leadership. I also do not think that a conglomerate of brick and mortar companies has ever been done before. Like a bona fide differentiated conglomerate. You have seen companies like a TJ Maxx and a Marshalls. That's two different brands, but they sell a lot of the same stuff. Or like an Old Navy, Gap, Banana Republic. It's all one company, but it's different stores. Yeah, but it's all kind of the same thing. It's vertically integrated. You have not really seen a company that owns several premier brands in very, very different industries that are all still in the same retail sector. We have not seen that. I have talked about Hasbro to answer that question, Benjo. But as it relates to the capital markets thing, I mean, I've said it plenty of times on my channel, but I think that's possible with literally anything GameStop buys. I think that's possible because anything GameStop buys could be the last domino to fall to send GME to the moon. And if GME goes to the moon, we saw what almost happened in 2021. It almost transformed capital markets forever. And if GME does go to the moon, then it will. It has almost nothing to do with, oh, that means they must be buying this type of company because this company has a finance angle to it. And he said capital markets, and that means finance. So he must be buying Robinhood. I'm like, I just don't think that particular comment is related to the industry. I think it's more related to, I think it's achievable with any name we've talked about. It's achievable. I don't think that's the bottleneck in the names. Any of these that are interesting enough for me to take a quick look at, like Paramount, I'm like, okay, that's a big enough brand that I guess we could look at it. But look, they're just bleeding money. I'm like, bleeding money? I don't think he's trying to do that. Again, I could be wrong. I'm giving you my thoughts. Wynn Resorts. Does he want to own Wynn? A price to earnings of 38. It's not exactly a diamond in the rough. We could dive deeper into the financials, but I'd rather save the effort for companies that I think are more likely. Even up the past year, generally it's kind of like it's sleepy-ish. It's sleepy-ish, but if you wanted to buy Wynn, I just think, why wouldn't he buy Caesars? I think he'd rather buy Caesars than Wynn, personally. And I don't think he's going to buy Caesars because Caesars is only a $5-6 billion company. So, I don't think it's Wynn. What else? What else is interesting enough? Texas Roadhouse is epic, but the thing with Texas Roadhouse is they are already pretty saturated internationally. They're also not exactly sleepy, right? For a restaurant, a 26 is actually a pretty high PE. Personally, I do not think it's Texas Roadhouse. And generally speaking, that operation is flying on all cylinders. So it's not that interesting to me. Some people have talked about Chewy. Chewy's PE is super high. It's a great example of what I was talking about earlier. We're like, oh, Chewy, perfect. It's online, right? And he used to have ties there, right? And look, it's down over the past 5 years. It's like, yeah, but you know what else is down? Earnings. Their PE is at a 50. Like, that's not a diamond in the rough. Now, again, you could say, but what if he said this, but he actually doesn't care? Again, we could talk about what ifs and be here for 30 days straight without stopping. But we're trying to get narrowed down on what actually is really plausible. I don't think Chewy is super plausible because it's just so stinking expensive. Some of these other companies like Domino's, Clorox, Five Below, a Coke subsidiary. Again, these are pretty small companies and companies that are well established that make Domino's like I just don't know if you would call these diamonds in the rough. Like, these are relatively high performing companies relative to their industries. Domino's, not super impressive the past 5 years, honestly. So maybe I should look deeper into it. But again, a PE above 20 as a restaurant, I'm like, it's not a bad valuation. I think he wants to buy something that's undervalued. I don't think he wants to pay market value for something. And if he did want to, it's like, what about Domino's would he want? You know? What's their most recent 10K looking like? I'm curious, Domino's. I'm curious. Help me out. Jeez. Here's Q1. Oh, it's Q1 of 2025. Jeez. Here's Q4. So they grew 5%, same store growth of 3%. They're super international. Look at that. They have more international than they do US in sale. Like, it's a lot of complexity. Cohen just spent all this time closing all this international presence with GameStop. I think he wants to own something that is really truly US based. They also have a ton of debt, which could be exciting for Cohen if he really valued the upside. But look, they're doing 1.5 billion in revenue. It's like, okay, 1.5 bill in revenue, not exactly crazy. Not exactly so huge for a company that after years of downsizing is still doing closer to 4 billion in revenue. More than double the revenue of Domino's. You know, it's just kind of crazy how undervalued GameStop is, honestly, when you really get down to it. What's up, Chris? Better late than never, indeed. Five Below, like, also very highly, like a very high PE ratio. Hyatt. Bum, bum, bum. Not exactly sleepy. And what a crazy PE ratio. What a crazy company. A company that I think is, unfortunately, I think is very possible is Best Buy. The PE's come down all the way to 12. when I first evaluated Best Buy, it was at a 20. Now it's at a 12. It's still not a huge market cap, but it's big enough. The thing with Best Buy is they have been declining for several years in a row. I think, and I dove into this in a video, so I won't dive into it right now. But 4 years in a row, I'm pretty sure, of declining revenue, declining earnings. And look, they're raising the dividend. Like, now management raising dividend and that being silly doesn't matter that much, because if GameStop bought them, he could change it up. And obviously, there's plenty of synergy between Best Buy and GameStop. If GameStop bought Best Buy, they would be the electronics retailer of America. Best Buy does have operations outside of the US. They have some in Canada and I believe in Mexico as well. I think that is unattractive to Cohen. The main issue, though, for me is the durability. I don't think that Cohen views this market cap and this revenue as durable. Target, their revenue's been flat for 5 years, even as their stock has done poorly, even as there's been protests and political boycotting on both sides of the aisle against Target. It's like no matter what comes against Target, they still freaking sell $100 billion worth of stuff. Best Buy used to sell 50, and then they used to sell 48, and they used to sell 44. Like, what is the floor, and why should we think that the floor is here as it relates to Best Buy? That's my big issue. Other than that, it's totally possible. But if I'm being honest, like, I hope that the percentage chance that it's Best Buy is like 2%. Like, I don't want it to be Best Buy. The only reason I'd be excited is because I trust Cohen. So if Cohen bought Best Buy, then I would look at the glass half full, and I'd look at all this revenue that he's going to capture and what he's going to do to grow earnings, stabilize store count, and turn the ship around. I just don't know if that's that easy of a task, and I don't think Cohen wants that hard of a task, personally. But you can't deny 40 billion in revenue is pretty stinking large, and 12 on a PE is not like, it's not crazy, but like it's pretty low at this point. The problem is the earnings keeps going lower. That's the problem. That's the big problem with Best Buy. But I think you have to put Best Buy on the list. I think you just can't be honest and not have it on the list. Let's look at McCormick. What's McCormick up to? Again, packaged foods in general, I think not Cohen's, not my top pick. PE of 18, not crazy high, not crazy low. The thing with these food companies is it's so many brands. Like, Cohen's never done something like this. A crazy conglomerate that basically, like, you buy this one business for 13 billion, and all of a sudden you have to run 20 different businesses. And it's like, man, that said, down 44% over 5 years is pretty compelling. Let's see what the trajectory has been for their financials. Because what you want to see is financials that actually look pretty decent against a stock chart that looks pretty miserable. You put those two together, and then you get in the rough. It's just such an established business. Okay, just show me like the whole. Can you just show me the whole thing? Okay, here we go. Item 8. A little creep up in sales, right, from 6.6, 6.7, 6.8. But some of that is also overcome by cost of goods sold. So their operating income is like, it's a little bit of growth, in net income. I just don't know, like, what moves the needle. Like these costs of goods sold, like Cohen could come in and slash SG&A, but is he really going to be able to manufacture your spice packs for less? I don't know. Clown Doctor says, remember to like the stream. Chris Clifton says, didn't McCormick just do something with Unilever? I don't know. I don't even know what Unilever is. Unilever. McCormick. Oh, there you go. $45 billion company to create a spice giant. There you go. And investors don't even know if they like it, apparently. Wow. Well, I'm glad we spent this time because what we were kind of getting to is it kind of looks like it's a decent acquisition target, decent acquisition target. And sure enough, Unilever thought so. So there you go. It's not McCormick. Deckers. There's just no way it's Deckers. Look at that. I mean, that's crazy. Just not sleepy enough. Not sleepy enough and still also below 20. Let's get above 20 so we can actually get interesting. So far, nothing even close to as exciting as Target, in my opinion. But I'm trying to give the rest of the world a fair shake. What do we think? Like some of these names that I don't even recognize, like Woori Financial Group. I'm like, okay, is that technically consumer facing? Sure, maybe. But if no one's ever heard of it before, I don't know if that's really what Cohen's going after. I think he values brands that are recognizable. It's like, okay, is Viatris a drug that a lot of people buy from? Maybe. But is that consumer enough to be considered consumer? I don't really think so. Affirm's at a 53 PE, so just knock them off the list. McCormick almost made the list, but Unilever beat us to it. I wasn't excited about them being on the list, but I was like, well, they probably deserve a shout out. We've got Lululemon, which Michael Burry owns. An 11 PE. It's definitely quite low. Definitely sleepy management when you look at their performance the past 5 years. Down 50% just in the past 1 year. So this is probably worth looking into a little bit. Lululemon 10K. Let's see. Here's Q4. Item 8. Here we go. Here we go. What do you got, Lulu? You got 8.5 bill in assets and only 3.5 bill in liabilities. That's pretty nice. Tell me about your sales. Revenue up 3 years in a row. A little bit faster of a growth rate than we saw with McCormick. Cost of goods growing really almost at the same pace the most recent year. SG&A is kind of blowing up. Look at this. This is a lot of glut. SG&A is up 300 million per year, like 10%, and then another 10% growth in SG&A. That's something that you figure Cohen would be able to fix or rectify in some way. And look, net income is flat because costs of goods sold are rising, which they may or may not be able to control that well. And SG&A is blowing up, which they should be able to control better than that. So net income is underperformed. And that makes it interesting for sure. This is, I looked at this for a hot minute, like at the turn of the year, and they were 30% higher. When we were talking about acquisition targets 3 months ago, they were 25% higher than this. Now they're down to an 11. You know, you probably got to give them a shout out. Any reason why Lulu should not get a shout out? I don't think so. Does he like that brand? You know, it's a good question. But when you think about, let's see, Lululemon is an $18 billion enterprise. They are making $11 billion in revenue, which is not a crazy revenue. Like I don't know if that's exciting enough. The PE is at an 11. Price to sales is actually a little bit high, right? 18 over 11. So 1.6 on a price to sales basis. So relative to their revenue, not the cheapest in terms of valuation. In terms of durability, I mean, what would you call this? Like number one, like women's, or would you just call it number one athleisure? Like it's a pretty niche claim to fame there. As far as number of stores and stuff, like, you know, there you go. They're definitely global. 30 countries. Again, to me, that's, I don't know if that's, is athleisure a durable enough like brand, like a durable enough industry for Cohen? Or is this too much like, oh, I have to be trendy and I don't know how to be necessarily trendy? Like, are these customers sticky enough for Cohen And then the fact that it's already global, is that attractive to Cohen, or would he rather just be in the US? Do they even need cash? They do not. Like, we just looked at it. Geez, I could go back to it. I guess I probably should. But they have in current assets 1.8 billion, and in liabilities, their prepaid stuff offsets this, but they still have about 150 to maybe 300 in current kind of payables. And then, is that it? They don't even have any debt. Yeah, I mean, they don't even have any debt at all. So, yeah, they got $500,000 in some kind of payables, liabilities in excess of their receivables, but they have 1.8 in cash against that. So, like, debt of, call it 0.5 against 1.8 in cash. To me, this is it right here. This. Now, you might not think it matters, but Cohen said, as it relates to him believing that they have the components as the acquirer, one of the things that he mentions is that we've got the capital, and to make the asset much, much more efficient. If capital is one of the, I'll call it orange instead of red, but I believe Cohen wants to buy something that could use the capital. I don't think Cohen's just saying, oh, we have enough capital to buy what we're buying. Like, oh, we can afford Lululemon, so therefore we have the capital for it. I think he's saying we have the capital to make the thing that we're buying more valuable, because they could use some. Lulu could not use some. I also think 1.6 on a price of sales is also not so cheap. So overall, I'll give it a 1%. But it's really not. I mean, it's really, like, to me, it's really less than 1. But I think it is attractive. It's a relatively attractive value play. It's definitely worth a shout out. It's worth being on the list. I will say that. It's also less than 20 billion, which I should also mention. I do think it's more likely that we're going 20 plus. So all of these seem a little bit low to me. Where's Lulu? There's Lulu. What's up, Dick's Sporting Goods? A 19 PE. Yeah, that is not sleepy enough. It's not going to be Dick's. Southwest just got taken over by private equity, like, within the past year. There's also, like, airlines. There is so much administration to the business. I don't think Cohen's interested. And their PE's at a 45. I mean, it's crazy. That's honestly crazy for an airline. Airlines are usually closer to 10. So that's just wild. There's so much administration, so much, like, legal work with running an airline. I don't think it gives Cohen the flexibility to operate how he wants to operate nearly as efficiently. I doubt he wants to own Rivian. It's hard to call that a diamond in the rough when it's kind of a hot name within a hot industry. and they're not profitable yet. So you're just paying for the brand and hoping for the best. No, thank you. Twilio. Is it a 571 PE? So probably not Twilio. Let's see. What's a mare? That is not a sleepy management team. What do? They sell sports equipment. Okay. General Mills. Again, I don't think food packaging is where he wants to go. Down to a 9.12. General Mills? Surely not, right? Surely not. Do you deserve a shout out? When was it published? May 2017. It's crazy. No way. See, wow, that's shocking. What should be one of the most durable businesses ever is struggling on the top line retention. And they've been cutting costs, keeping SG&A stable. I mean, that's pretty stable, but a business like General Mills should be even more stable than that. I don't think that really passes the quality/durability threshold personally. Let's take a break. How are we doing in the chat? How are we doing? So far, I have added Lulu as a possibility. That's what we've done so far. I've shared some rationale, and we are let's see, there's 50 of these per page. We've already knocked out basically all of page 1 and page 7. We are almost done with page 6, which means page 2, 3, 4, and 5. Got about 200 names left to scroll through of what's possible. And next up, you guessed it, is SoFi. But genuinely, I think the parameters I'm putting on this search are pretty generous. Pretty generous. Which means I really don't think any names other than what we're covering here. Yes, they're technically possible, but basically I think we're narrowing it down to the only names. What's up, Skybike? What's up, Dunlop? People saying check out GME Dark Pool. I mean, how do you do that? Is that a post trending on Superstonk right now? What's up, Zachary? What is up? What's up, Patrick? Zachary says 3 massive dark pool orders just went through, and it's 69 days till the annual meeting. 1 million shares average each in the dark pool orders. That's exciting. Very exciting. Mara is not consumer facing bubbles, and they are also not above the $10 billion market cap threshold. So, what's up, MASTR Master Productions? That perspective. What's up, Carl? You're here, man. You're here on a live stream. John Chess, good day. Good day. Great to see you guys. It's 1 p.m. Oh, I am not just about done, Carl. You would think that because it's been an hour and 10 minutes, but I'm trying to give people the real truth over here. And we're whittling down the genuine list of consumer names that GameStop might buy. I am feeling more confident than ever that it's Target so far, but I'm trying to be convinced. I'm trying to find value somewhere else. Thanks, Master. He says, you're one of my favorite YouTubers. Love the thorough analysis. Thank you. Thank you. We are here for the real education, the real empowerment to really help you as an investor, not to entertain you like as if you're, I don't know, just a vegetable and needing entertainment. If you like learning, though, if you like curiosity, then maybe there's some entertainment here. So far, I just can't get over this PE, honestly. Like, I just don't know why. How would this be considered a diamond in the rough? When, okay, they do financial services, they have credit cards, whatever. Like, look at like a Capital One. They do financial services and credit cards and stuff. Oh, and they're at a 44. Okay. Look at Visa. They do financial services and credit cards and stuff. Some online lending. They're at a 28. So maybe SoFi is not like this. Maybe this isn't crazy overvalued. The companies that have more assets, like what is Wells Fargo, for example? Wells Fargo's at a 12. You know, bank stocks typically are 10 to 20. So for a bank, SoFi is super richly valued. For a credit card company, they're somewhere in the middle. But you wouldn't call this a deep value. Even the management team, like, okay, up 40% in the past year. Is that really sleepy? Yeah, they're flat the past 5 years, but there's a bunch of companies that are down 50, 60, 70% over the past 5 years. When you think about branding, like they already have SoFi Stadium in LA. Like it's similar to what I was thinking with Domino's. Like if the way that you grow is through investing more in marketing, but you're buying a company that's already invested so much in marketing, it's like, how do you really, you know? You could cut marketing, try to cut costs and make more money that way. But I don't know, is there like a bull thesis for SoFi that I don't know about, or people just like SoFi? Because several people have asked me about it over several different videos in the comments, etc., which makes me want to give it like a little bit more runway than I normally would. But the top line better be like pretty exciting to justify the situation over here. Here's your 10K for SoFi. Take me to the numbers. Here we go. 50 billion in assets. Most of their assets are loans because they are a lender. So they've got 5 bill in cash, 5.5 bill in cash, plus another 2.5. So what's that? 8 bill in cash and securities. and another, what's this? 48 bill, or sorry, 38 bill in loans. Now they have deposits against those loans as liabilities. 1.8 bill in debt. So not a lot of debt. I mean, their debt is super low, which you like to see. Like, you, as an investor, you want to see that. I think Cohen is interested in buying something with a little bit more debt stress. So the lower of their need for debt, actually, the less likely I think an acquisition would be. Let's see what their revenue is doing, though. So they made this past year 3.4 billion in interest income, and then they paid their depositors 1.1 billion. So they netted 2.2 billion. I mean, to be a consumer lender, primarily for student loans, guys, you got to remember that the person we're talking about is named Ryan Cohen. He did not go to college. Ryan Cohen did not. I'm not sharing my screen? No way. Is that true? Oh, yeah, I am. Yeah, I am. I am sharing my screen. Why did you say that, Herman? I think I am. Did the rest of y'all see my screen? Wow. Well, sorry. Sorry for not sharing my screen. Y'all are saying you just see my face? For real? On my end, I'm still sharing it. Only the mustache, huh? Well, what if I stop sharing and then share again? YouTube always trying to knock me out of the game. What about now? You see it now? You see it now? Thanks, Grady. He says, no apology needed. I'm very pretty. Okay, y'all see it. Great. Hey, thanks, guys. So, Ryan Cohen, not a fan of college. Why would he want to own the company that primarily profits off people taking massive loans to go to college, which he doesn't believe in? Right? And then again, you're still talking about 3.3 billion in revenue. That is less than GameStop's revenue. I just, and then you're paying a pretty high premium for it as well. I just don't think SoFi is viable for those reasons. Thanks, chat. Thanks for the help. If you want to look at their 10K, we looked at their 10K. Here's their revenue. Earlier, I was talking about their balance sheet, which is up here. They don't really need cash. They don't really make that much money in revenue. They're super highly priced. And philosophically, what they do is help people go to college and borrow money. And I don't think Cohen wants people to borrow money they can't afford. And I don't think he really wants college to be the thing that they buy money for. So it's just probably not SoFi. Burlington is also very highly overvalued. It's worth looking at, though, because I'm pretty sure it still is. Yeah, they're at a 32. They're another great example of why I'm so excited about Target, because every other discount retailer is trading 25 to 35. Burlington's, Ross, TJ Maxx, all of them, Walmart, Costco. Target is the only one that's just hanging down there by itself. Even Dollar General and some of those trading 25 to 35 on a PE basis. So industry multiple wise, there's a lot of room to grow from how Target's currently being valued. Another Coke subsidiary, which is not really viable because Coke's not going to sell its random separate subsidiary. Dollar Tree. Oh, let's look at Dollar Tree as another example of what I'm talking about. Let's see how they valued. Another discount retailer valued at okay, this one's only a 17, so this one's come down a little bit. Down 12% year to date, but still much higher than where like a Best Buy or a Target is, for example. First Solar. Let's see if Dollar General is the same way. Have they come down? Maybe Dollar General is just eating Dollar Tree's lunch. Okay, no, they're both at a 17-ish. So there you go. But Target, obviously, much more similar to your Ross, TJ Maxx, Burlington's, right? The mom's looking to spend some money. Ross is at a 31. TJ Maxx is at a 32. We just looked at Burlington's at a 32. Costco, show me some more moms looking to do some spending. Costco's at a 52. Show me Walmart. People trying to do some spending. Walmart's at a 45. And then you got Target. And where are they at? Even after the appreciation they've had this year, right? They're up 24% in the past 3 months, and they're still lower than all the companies we just talked about. It's just crazy. We got to move on. We can't talk about Target forever. What's First Solar up to? Does Cohen want to sell solar to some households, some door-to-door solar salesmen? 13 PE. Is that common or not? I don't even know. What's a typical PE for a solar company? Okay, well, okay, so many are higher, whereas if they're bigger and more established, then they're kind of lower. Let's look. What you want to teach me about First Solar? You know, we're trying to think expansive over here. What do y'all think? There are non-US companies on this list, on this screener, just so you know. But like this is a Brazilian-based company. But there aren't very many non-US companies that honestly are known consumer brands, because the US is by far the largest consumer industry, or like consumer economy. Here we go, First Solar. Teach me something. Look at that. Well, I should have actually checked the chart for a sec. Okay, yeah, sorry. I should have just stopped right there. 130% over the past 5 years. This is nice growth, but it's not a sleepy management team. It's not really a diamond in the rough. It's just kind of a diamond in the diamond field. You know, diamond in the diamond field. It's not you. Sorry. Formula One group. That sounds exciting. Fwonk. People talk about super stonk, but they don't talk about super fwonk. But it says it's Liberty Media. Did you change your name? Oh, there you go. Formula One. 38 PE is probably a little rich, but you really do own the Formula One brand. That's pretty cool. But this is probably too highly priced. Yeah, this just isn't sleepy. Williams Sonoma. Let's see. Someone asked in the chat, what about Bed Bath & Beyond type industries? So we are looking at all consumer companies, which does include retailers. So any of those will be included as well. Williams-Sonoma, not exactly looking sleepy, up 100% over the past 5 years, 1,000% max time. Turns out that it pays pretty well to sell to the rich. Turns out 20 PE is not horrible, but it's not exactly deep value. And the stock chart is just like, yeah, there's no way that you would call that sleepy. Oh, this is not really Lowe's. This is Lowe's Insurance. Lowe's. Regions. I just don't think a bank. I just don't know if he really wants a bank. There's two sides of the coin. Both of them tell me I don't think he wants a bank. One of them is similar to airlines. There's a lot of regulation in the banking industry. And I think Cohen likes free markets. I think he wants to buy a company and do his thing. I don't think he wants to worry about regulators trying to mess with his mojo all the time. I think he just wants to sell stuff efficiently. Banks don't really fit that model, and the only thing he's selling is debt. And I don't know if he really wants to be in that business. I don't think that gives you the recurring type of sticky customer that he really covets. The other reason, on the other side of the coin, is that I'm pretty sure Teddy Holdings filed its own bank charter back in the day. And so if he already owned his own bank charter, why would he buy another bank? Or you could say that that's exactly why, because he is interested in buying a bank. Could be. But, it's hard for me to say that he would be. Is this a sleepy management team diamond in the rough? Not really. I don't think so. I'll keep looking at banks just in case, but that one in particular. Oh, here you go. Formula One is now Fawona. Fawona. Here you go. Capital Markets. Circle Internet Group. Is this really consumer? It's hard to say. Jeez, they just started less than a year ago. There's no way this is it. But hey, since their IPO, they've tripled. They don't make any money. But hey, if you want to be something about capital markets, here you go. Circle Internet Group. I doubt it. Darden is another holding company of several companies, including some that I think are generally struggling, like Red Lobster. Or no, they sold Red Lobster. Olive Garden, Longhorn Steakhouse, Cheddar's, Yard House, Bahama Breeze. A PE of 20 is, again, very typical for restaurants. So to me, that doesn't scream value. And a chart that's doing fine also doesn't scream value as far as sleepy management team. I don't think it's Darden. Ulta, another company that gets a higher PE than a Target or a Kohl's. I don't know why he would covet Ulta specifically, especially to pay more for an Ulta when Ultas are always trying to position themselves in the same parking lot as Target. Like, if you really want Ulta, go get Target. Target's really the big dog, in my opinion. Synchrony is a very consumer-focused financial firm. What about Synchrony? See, this one's a little bit lower. This one's more like a 7. PE. Oh, so they do like small consumer focused lending on like purchases. Let's see. Are they sleepy? Not sleepy. Up 68% over the past 5 years. Interesting to look at from a company perspective. Synchrony Financial. I'll save that for another day. I'm personally curious about this company. I just want to look into it another day because the front lines facing lending, I think is pretty attractive, although probably there's a lot of competition there with your PayPals and Affirms, but Affirm's getting like a 50 PE. Synchrony's getting like a 7. So I just want to learn a little bit more about Synchrony one day and figure out why are they getting a 7 PE? Why is that? But I don't think the management is sleepy, so that's why I don't think Cohen would be interested. Oh, then you got Zoom. That would be kind of fun, poetically, if GameStop bought Zoom, because it's like zoom, zoom, zoom goes the stock, you know? They're down at a 12, which is very low for a SaaS business, very low as an AI business. Zoom is a company that I know that I really like from a value play perspective. And you can see that post-COVID, their stock's been absolutely hammered, down 75% over the past 5 years. But top and bottom line continue to grow since then. I have not spent any seconds of my life thinking about would GameStop be interested in buying Zoom. I don't think, to me, they're not particularly sleepy. I listen to their, like I consume their earnings reports, and I'm aware of their general strategy. Why are we down here? Don't take me down here. Sorry. Revenue in the past 3 years, up every year. Costs relatively static for a growing gross profit. Operating expenses coming down every year. Income from operations. Look at this line, guys. I'm not trying to sell you on Zoom stock, but look at that. Revenue up 3 years in a row. Gross profit up 3 years in a row. Operating expenses down 3 years in a row. Income from operations doubled over a 2-year span, including some huge gains on investments, mainly Anthropic, some other income as well. So net income almost tripled over this 2-year period, or really 3-year period. It's just kind of crazy. Net income tripled, and the stock is down 75%. So the question is, why would they want to sell? I don't know. Are they really sleepy? I don't think so. Are they a diamond in the rough? I do think so, and they're definitely consumer facing. So what else can we ascertain? Show me the balance sheet. Do you have a balance sheet? No? I mean, seriously. Why is life so hard? Here we go. We found it. 12 billion in assets. You got any debt you need help with? Any? None. They got no debt. Look at this. 12 billion in assets, only 2 billion in liabilities. I mean, it's just nice. It's just nice to look at. It's just nice. So full disclosure, my clients currently have a position in Zoom as a deeply valued equity, deeply undervalued equity, 23 billion market cap. They're above the 20 threshold. 23 billion. Revenue, what was it? 5. We'll call that 5. 4.9. 5 billion in revenue. Price to earnings is, what was it? A 12. We'll call it a 13. Price to sales is pretty high, which you would expect for a software company because their costs of operations are much lower. Durability, what would you call this? Number one video conference. Video. I mean, that's really the big question is, does Cohen see that as durable, or does somehow technology evolve in a way that makes Zoom like unviable? Growth/scalable, I will say duh. Just like I said for PayPal, like when your business is totally online, it's very obviously scalable. They do not need cash at all. Like this is like, it doesn't have debt. Their balance sheet's amazing. So the questions are, it's definitely big enough. So we're not worried about that. We're above the 20 billion threshold. Even Lulu, I'll leave the 18 there. Is capital needed for the company, or is capital just needed for the purchase? That's the big question. If capital is just needed for the purchase, that takes this orange away. And then does Cohen see this durability somehow being threatened by technology? So far, it has not happened. Their revenue has gone up every single year since COVID, not including the COVID year. So diamond in the rough, yes. It's hard to say management's not sleepy when this is what the stock has done. So you'd think yes there. Consumer, yes. Like there's really no reason why it wouldn't be Zoom. They are California based. So I say that just as like it's slightly less likely. I don't know. Like maybe it is likely. They're not getting the California premium as far as their multiple. But, all of Cohen's comments about woke this and that, he would almost certainly, any company he buys, he almost certainly would move them to Texas, you would think. Is that somehow going to be difficult for Zoom employees? I don't know. Maybe some of them, he sells an office out there, but he just moves the headquarters. Like, I don't know. Hard to call it a 5% chance because it's not brick and mortar. But if we're just thinking consumer, I mean, to me, Macy's goes down to a less than 1% because of their market cap. Zoom, I'd say like we'll just give it a 2% to keep it all even. But I would be much more excited if it were Zoom than Best Buy. If we looked at the tea leaves, which Best Buy I'm going to call 1%, just because the tea leaves of the way that their stock has moved. Let's call it 2. Let's be honest to the people. I don't want it to be Best Buy, but it is totally possible. Zoom year to date. Okay, so nothing crazy. Post February 1st, their stock's been down, but if GameStop, we've been talking about this derivatives position. It's possible that they didn't open it until right before they filed. And it is up, over the past month, up 11% over the past month. And could that coincide with a derivatives position that Ryan Cohen built into Zoom? Totally possible. Compared to what's the SPY over the past month? The SPY is down 5% over the past month. Zoom, which should have a high beta because it's a tech name, is up 12% over the past month. So the tea leaves are there as far as the stock price, pricing in something. That's also pretty far. That's somewhat related to earnings reaction, but Zoom reported earnings a good bit before then. When did Zoom have earnings? Most recently, February 25th. So if we're looking at, post earnings, they filed here. Look at that. Earnings, before earnings, they were at 85. And then after earnings, they dumped $13 a share. That was the post earnings reaction. And I increased the weight in client accounts right here because I thought that earnings looked really stinking good to me. I don't know what I'm missing. But since then, they're up 10%. Did something happen with the way people process earnings 10 days later? Or did GameStop open a derivatives position? What do you think? Clip grid, just Google it. They don't buy, it's debt plus cash, leverage cash through derivatives plus equity. Google reverse mergers. Google, how does a SPAC with $1 billion in assets buy a company worth $5 billion? Just do some research. You don't have to troll in the chat. Clip, he's wondering, how would GameStop possibly buy a company that's worth more than GameStop? Maybe you're not trolling, but feel free to learn if you are genuinely curious. What do y'all think? Would you be happy if it was Zoom? Would you be sad? I'm giving it a 5% chance. I'm probably going to end up taking this down. I just want this to add to 100 by it's all said and done. And I want this list to be like the full list, I want this to be the full list. Throw Caesars in there. It's probably not Caesars, but it did deserve an honorable mention, in my opinion. Although probably not anymore due to the market cap thing. So maybe I should just take it out. But I'm sad. I don't want to abandon Macy's. I just want it to get an honorary inclusion. Because the only reason these wouldn't work is the market cap. Hypothetically, everything else still makes sense. PayPal also deserves to be in here. The only reason and we'll look again at PayPal here in a little bit when we get there, I think. But the same reason Zoom wouldn't work is the same reason PayPal wouldn't work, which is they don't need the cash. But maybe they don't need the cash. maybe Cohen, when he was talking about we have the capital, we've got the capital, maybe he is just talking about we can acquire it. Skybike says the same way people without 800K can buy an 800K house. Yeah, that's exactly how. How could you possibly buy something worth more than the cash you have in the bank? Jeez. Same way you never mind. Sorry, that was going to be too mean. Never mind. Okay, Zoom. I like Zoom. But I already liked Zoom. But I never thought about them as an acquisition target, but I could see it. Fox. Oh man. Let's hold on. Let's take Tractor Supply, TCSO. Anything I'm missing here with Tractor Supply? 22 PE. Not exactly undervalued, not exactly sleepy. I'm going to say it's probably not Tractor Supply. It's also like, I don't know. 22 it seems a little rich for if you're going to call it a diamond in the rough, it's a brick and mortar. 22, like, this is just sleepy enough to where you could say it's sleepy, and the value is, the multiple's just low enough to where you could say it's a diamond in the rough. But I'm not going to look into this one further because I just don't quite think it lines up. Fox. Oh, they got multiple classes. Okay. That is certainly not sleepy from a performance perspective. I don't think Cohen wants to get political in his companies. Yeah, there you go. Fox A and Fox B. Oh, Reddit. What if he bought Reddit? That would be funny. Jeez. That is not undervalued. He's not buying Reddit. That would be funny, though. Hazel, I do not think Burry knows what Cohen wants to buy. And Skybike, I did talk about them in a live stream or a video after his deal came out briefly, but I don't like his picks personally. Constellation Brands, STZ. What do we got here? What do we got? That's pretty sleepy. Is this 24 PE for a beverage company is relatively high. It's all beer and wine, which is fine. Let's see. Brands owned by Constellation. Oh, Corona, Modelo, Los Modelos, man. And Los Pacíficos, man. And Los Victorias, man. Okay. What's up, Constellation? You got $3 billion current assets, a whole bunch of property Look at all that goodwill. That's because they bought brands. Growing through acquisition. $2 billion in liabilities. Well, in current liabilities. A bunch of long-term debt. So they used a bunch of debt to finance some pretty generous acquisitions. Stockholders' equity of $8 billion. Let's see how their revenue's doing. Ooh. Yikes, shnikes. Declining. No thanks. Sorry. Sorry, Constellation. But when you're at a 24 PE, but your E is declining and your P is declining, what y'all in the chat know about when your P is declining? It's not a good sign. You do not want a declining P. Do not want it. You don't want it. She don't want it. No declining P. Thank you. KHC Kraft Heinz. Didn't they like just say they're going to divest of something? Oh, bleeding money. No thanks. No thanks. Dollar General. Yeah. Okay, sweet. Okay. We've got about 100 names left. Woo! And we're about to hit power hour on quite a fun day on the stock. Quite a fun day. Let's take a break before we dive into 100 more names. So far, we have gone through how many names? Like 400, 500 plus names. And the only ones that have been added to the mix, Lululemon and Zoom. We'll take a look again at PayPal here in a little bit once we get there. Right now we're at 26 billion in market cap. So market cap wise, these are some prime targets as far as the size of the company that we're talking about. All the other hundreds of names we've gone through, totally possible. Okay, I'm not trying to say that these are the only possibilities, literally. I'm just saying if you were going to try to make an educated guess, this is what the list looks like so far. We'll see if there's another 5 or 10 or 20 that actually makes sense added to this mix. And then I'll kind of re-rate what I would consider the probabilities and dive a little bit. I don't think that Zoom has any NOLs. What is this? Sorry, I just distracted myself. I wonder what the short percentage is real quick of Zoom and of Lululemon, at least as reported by Hood. So Zoom quite low at 2.4. And Lulu is what? At a 4. Okay, great. So it's not exactly a short play, either of these necessarily, but I don't think this is required by any means for GameStop to be interested. Let's go. Crossing over 23. How are we looking for the week? Max Payne is 22.5 for Friday. Let's see what we can do. Let's see. All right. I'm going to go fill up my water bottle, take a pee break. I will be back. We'll blitz through these 100 names. We'll do power hour together. Maybe I'll make it all the way till 3. I mean, might as well if the stock's doing what it's doing and we got some more companies to go through. What do y'all think so far? Like the video? Say what's up in the chat. I'll be back in a sec. What is up? Caesars is on my list, Jonathan Pickett, but I don't think it's likely because it only has a 5.5 billion market cap. Although, if you think that Cohen is going to team up with Carl Icahn, it is maybe worth noting that Icahn is one of the two companies in a bidding war for Caesars. So there's still definitely something there potentially, but we'll see. Skybike says today's price action is suspicious. I feel a rug pull coming. Yeah, I mean, it's happening across really the entire market. So it could be a market-wide rug pull as well. Michael Burry did double his position. Michael Burry has a 13% weight in GameStop as of his most recent purchase. I think someone should tell him that he is a lightweight. Just kidding. But as far as concentration goes, 13%, cool to see, but, doesn't exactly earn you too much street cred here at Budget for Life. 13% weight. Let's go. 3 minutes until Power Hour has officially begun. We are enjoying it. Skybike is over 100%. Welcome to the club. Over 100% here. Let's check out some more companies together, and we'll reference the old stock as well, especially as we get to the last 30 minutes or so. Casey's. They are a gas station. There you go. No sleepy management there. It's not Casey's. It's that simple, right? I mean, it's just that simple. TradeWeb Markets. What's TW? Let's see. 60% over the past 5 years, 30 PE. Probably not a deep value play. Okay, so it mostly has companies as its customers. So probably not TradeWeb. A utilities company, high regulation, again, highly regulated, and not a lot that he can do from a consumer sticky perspective in terms of how can he delight customers? How can he build a brand over time? It's hard to do that as a utility company. Expedia, travel services. So PE at 23, not super low, up 30% over the past 5 years, not super sleepy. And just generally speaking, travel services, I think, could be one of the most harshly impacted industries from AI. So I don't think that has the durability that he needs. Tapestry. What are we doing over here? Tapestry. 250% over the past 5 years, 57 PE. Not sleepy enough. What else we have? United Airlines. I don't think it's an airline, but let's just look for a second. Yeah, not sleepy. 62% over the past 5 years. And his PE is low, but not super low compared to the industry. IBKR. That would be kind of fun if the company that Petterfly or whatever reported, they're up 400% over the past 5 years. That is wild. Is their market cap really that large? Oh, this is like a subsidiary. Yeah. It's not Pettifree. He gave that public statement after the 2021 sneeze about how GameStop was about to break the financial system. So that's exciting. Honda, honestly, car manufacturers are in a lot of trouble, generally speaking. I don't think that he's going that route. Just not the most durable with the trend towards electrification, which is consolidating the auto industry. 2, with the macro economy, interest rates being high, people not being able to afford anything hurts the auto industry. And then 3, the growth in AI and robotics, like more and more people, especially when you think 5, 10 plus years out, will be using ride sharing as their method of transportation. Fewer people will own their cars 10 years from now than people own cars today. And so it's just not the durability that you'd want, despite it being a traditionally durable industry. Equipment is still so much business to business. Healthcare, res, med, another travel services. What is Viking? $26 PE. Destination focused itineraries. Yeah, I mean, a huge growth. It's not sleepy. It's not sleepy. Paychecks. Haha. PAYX. What's up, Paychecks? This is probably mostly business to business, right? Yeah, payroll services. Nope. Carnival. We going on some cruises. 10 PE. This says it only has a $5 billion market cap. This says it has a $33 billion market cap. Let's look at the Carnival numbers here. This would be a fun consumer company that's been mentioned as kind of a meme company, which is interesting to me because of this statement by Cohen. Well, he didn't make a statement, but the article says that Cohen bristles at the term meme stock, telling the Journal it's a label people use when they don't want to do the work. So that makes me think, could he be buying a company that could be associated as a meme stock? You know what I mean? And, well, let's actually look at maybe the 2025 10K instead. Here we go. Revenues up. Expenses up, but a little bit less. SG&A up. Overall, their operating income grew by a bunch year over year. Net income up like 30%. So that's exciting. Look how they got a lot of money in their ships. $44 billion worth of ships and a lot of debt to go with it. That's a lot of debt. Man. Still clearing 12 billion in book value, but obviously that book value isn't real. Like, you're not going to be able to sell these ships for their asset value on your balance sheet. So this is definitely one where you would need, like, they would need the cash pretty big. So let's take a look into Carnival here. Actually, knock out, management seems to be heading in the right direction. It's not super sleepy the past 3 years in particular, but maybe still low enough to gain some interest from Cohen. I gotta knock something out. I'll be right back, actually. Mission accomplished. Sorry for that. Carnival, looking kind of interesting. let's kind of just start putting the pieces together here. $33 billion market cap, which is a nice size. It is global. So again, I don't know if Cohen wants a bona fide global business personally, but revenue wise, they are at 27 billion in revenue, which is quite large. PE is at a 10.6. Let's fact check that because this listing here is a little bit interesting. There you go. $36 billion market cap. $11 PE. Price to sales. 36 market cap divided by 27 in sales is a 1.3. Durability wise, the thing is, Carnival, I'm not sure if they are actually bigger than Royal Caribbean. Royal Caribbean is much less sleepy. But yeah, bigger market cap and a bigger PE ratio. But if Royal Caribbean has done 224% growth in 5 years and Carnival is flat the past 5 years, then you got to think there's some upside there. But you are the number 2 cruise liner. You are not the number 1. As far as growth, like I don't know how much growth is really there. And why is this here? Because Cohen wants something that is scalable with growth prospects, right? Some of y'all are thinking, hey, cruise ships are very big. So it would make sense for very, very big. Growth prospects, I think at the very least is true as it relates to the stock. Because look how much they've underperformed Royal Caribbean. Carnival's always been kind of meme associated. Royal Caribbean has never been meme associated. So like there is market share there to be had. So I'll put like a question mark or like, I don't know. So how much growth really is there? You're competing with a whole lot of other things in the world of travel. And generally speaking, are people traveling more? Yes. Travel money is always growing, I guess, if the economy is growing. Do they have some NOLs? They really might. What type of short percentage? Okay, it's not, at least publicly, it's not highly shorted at this point. So it probably used to be. Debt to cash. Here's where it gets kind of interesting. Their debt, $24 billion in long-term debt, plus $2.6 billion in current debt. They have another $10 billion in current liabilities, and they do not have current assets to offset much of that. Customer deposits, they don't have to pay that. They just fulfill that once the cruises happen. But there are still about 3.5 billion in accrued liabilities accounts payable versus only 1.1 in prepaid. So that is about 2.5 billion plus the 2.5 there, about 29 billion in debt against 2 billion in cash. I mean, that's just like, holy smokes. That is crazy. They have so much debt. Oh my gosh. That's just crazy. And when you think about the balance sheet, like assets to liabilities, they have about 50 billion total. Yeah, 52 in assets. And what, 39 in liabilities. So not exactly a enviable balance sheet by any means. And a huge need. Do they have NOLs? Does Carnival? No, not New Orleans, Louisiana. Carnival total. Wow. Look at that. So they've used some of this, but they have at least 20 billion left in NOLs. 20 billion in tax-free net income that Carnival gets to use. Does Cohen really care about being the number one brand in an industry? And does he think he can or can't become that? You know? We do. Oh, man. I mean, pretty interesting. There's a ton of risk in this business. I can understand why it's only getting a 10 PE because their balance sheet looks disgusting. Truly. But I can also understand why people would see deep value here because the upside is like, well, here's another one that's literally worth twice as much. You know, like it's not bad. It's not bad at all. Would have been better to buy in 2022 though at 626 a share instead of when it's already 4 times higher. I mean, it is 4 times higher. That's kind of like, is the management team sleepy enough if it's gone up by 300% over the past 3.5 years? Or did management figure it out? You know, that's a great question. PE is a decent bit lower than Royal Caribbean. I wonder what Royal Caribbean's balance sheet looks like. That will help me understand if Carnival's is really that bad or if that's just the way that it goes. Show me the financials. It won't even let me click financials. Error. Unable to load. Okay, fine. Just show me at least in a press release or something. Anything? Raising some debt. Jeez. A 10Q? What about this one? Okay, fine. This is from a year ago, but at least that gives us the idea. We're just looking for the balance sheet. Here we go now. They've got a year or 2 years ago, they had 37 bill in assets against 29 in liabilities. Basically no cash at all. 32 bill in property and 18 bill against that in debt. So their property to debt is like basically 3-2. Like they've paid off a little over 30% of their ships compared to Carnival was a little bit less than that. So Carnival's balance sheet is worse, but not like dramatically worse. You got to give it a 2% weight. I mean, it's totally in play. I can't say that it's not. I mean, plot twist. Did not expect to get there. I personally, I'm not like, ooh, man, this is such an exciting business that is at such a deep value. Like a 10 PE is not such a deep value. And this management team is not such a sleepy management team that honestly, I want to just bring it down to a 1% for those reasons. But I mean, for the NOL's perspective and the like Carnival, it would make sense for them to be interested in selling because they definitely could use the cash. But like I said, I'm not like personally, I'm not like, oh man, I need to go buy Carnival because it's so low. QSR, what are you looking like? Restaurant brands, not very sleepy, not undervalued. Move on. The Mexican beverage company. I don't think he's going that route. Does he want Dr. Pepper / Keurig? Got some sleepiness to it. Not exactly deeply undervalued, though, as far as consumer packaged companies go. It's fine. It's a fine value. It's not super, it's sleepy enough, deep enough to where I should consider it a little bit. But also, like the trend of soda is not exactly great. So when you think about durability, it's like, do you really want to be a soda company? Not exactly. People are drinking less than they used to. Live Nation, LYV. We're starting to get up there in market cap, just so you know. I think this is still ranges that GameStop could definitely hit. Massively unprofitable. Stock up. It's not going to work. Here's another casino. Again, if he's going casino, I think it's Caesars. I just don't know why he would pay a premium for a brand that's honestly not as big of a brand as Caesars. XYZ, I don't think Jack Dorsey is going to try to sell this. But look at that sleepiness. Very sleepy. Halo 3 party on a boat. You gotta love it. Yeah, I mean, Carnival, I mean, as far as if Cohen means anything by what he said about memes, and the NOLs and short percent does have a tie to Berkshire Hathaway. Like, that's how Berkshire Hathaway scaled, is leveraging NOLs. 20 billion in NOLs is just crazy. Just crazy to think about. That debt to cash is wild. The problem is the assets that are depreciating assets. Like Target's debt to cash, last time I checked, was at a 9.5, but their debt is in real estate, commercial real estate. Carnival's debt is in boats. It's almost like I should take this number and just multiply it by 5 to show you how severe their current debt situation is. But I think if Cohen wants to play into the retail / meme mania, there is some interest there. Like that's an angle that's unique that most companies don't have. 27 PE, not exactly undervalued for Block, Square / Cash App. I think he would rather go PayPal personally. So I'm going to leave that one off. Here we go. We're in the home stretch. We're in the home stretch. Take two. T2. Unprofitable, sideways trading game publisher. I don't think he wants to pay $36 billion for a company that doesn't make any money. Personally, we've got a real estate REIT in here. What's TKO all about? What are we all about, TKO? Look at that. Oh, that's WWE and UFC. Wow. That's a perfect ticker for them. But this PE is crazy. 86 PE, up 400% over the past 5 years. Pays to be in sports, but I don't think Cohen's trying to pay that rich of a premium. Also, I don't know if he even played sports. I don't know if he has that type of emotional attachment. But he might want to own something that sells to sports people. He obviously doesn't have an emotional attachment to like the video game industry. So, but not for that type of a premium. JD.com. 15. They sell electronics. Logistics. There's a lot going on here. It's also based in Beijing. Some people might like that. But is a company in Beijing really going to sell to a U.S. company right now in this geopolitical climate? I know Cohen tweeted once about how China's the sleeping giant or something like that. So maybe, but it seems quite risky. This thing's 530 pages long. Let's go. Show me the financials. Oh, are you not even going to do it? You're going to do it eventually, right? Item 16. I thought we're looking for item 8. Maybe item 8 is not financials for their filing. Oh, here you go. Here's some. Okay, it goes the other way. Here's 2024 out here. Revenue. Up to 1.1 billion. That's in revenues, right? Yeah, in millions. Oh, it's a million. What's a million times a million? What's a million times a million? Is that a trillion? What's 1 million? That's a trillion. Holy crap. That's crazy. That's 1 trillion. $1 trillion? I mean, that's crazy. Normally, a lot of companies put this in thousands, but JD does it in millions. So here's the cost, and then the income, operating income is 38,000 times a million. I feel like such a brain dead person at this point. Is that 3.8? Is that 38 billion? It's got to be 38 billion, right? No, 38,000. Yeah, because that's 38 billion. 38 billion in operating income. And then they're adding, what's this? And they got another 13 billion of other income? What are you doing? What's your other income? $38 billion in operating income, plus another 13 billion in other income. Take out some tax, you got 44 billion in net income. Is that 44 billion in net income? I mean, what the heck? If they've got a mark, did something just fall off a cliff over the past year? Like, why is this thing? That would put the PE at like a 1. Oh, orange guy says, what currency? There we go. There we go. There we go. These are all. Oh, but these are RMB, right? That's the Chinese yuan. Great. Oh, great. Thank you, bro. Thank you, orange guy. So 15 cents on the dollar is the currency conversion currently. So 44 billion in yuan times 0.15 is 7 billion in USD net income in 2024. Oh, there you go. They just do it. Geez. They put the US for you right there. So at the time, it was only 6, but using the current conversion rate, it's actually like 7, which is a little bit interesting. Billion in net income against a $47 billion market cap is still just like, this, if Cohen, I mean, this is a little out of my depth. I'm not normally trying to go international, but sure seems like they make a crap ton of money. But you'd want to learn like a little more on what that other income is. I could have to do a little bit deeper in terms of, is this other income going to keep happening? Like they had 35 billion yuan worth in 2020 of other income, but then for the next 2 years they had none, and then they had 13 and 4. Like, do you even value that, or do you just go income from operations, which took you from 12 to COVID hit a dip, but they were still profitable even during COVID, and then grown since then. It seems to be a little something. Oh, JD is also on Burry's purchase list. Well, that's interesting. JD.com. Here you go. Now we're in China buying stuff. It's a lot going on. Man. Well, interesting that it seems like a deep value play. It seems like the PE is even a little bit lower than what's reported here. They also pay a dividend. Obviously, there's a lot of geopolitical risk. I don't think like this is a likely acquisition target just because Beijing selling to US, I don't think is really in the cards. But it's hard to say it's for sure not. $47 billion market cap. Revenue in USD. Do they have anything for 2025 yet? 2025 revenue. Oh, here you go. Increase. So revenue went up again in 2025 compared to 2024. But then they had a net. Oh, look. Man, this is all over the place. Net income. Net income. They had a loss in 2025. So that you take that 41 billion or that 7 billion in USD income in 2024, and it turned into a $3 billion US loss in 2025 despite increasing revenue. This is definitely like, I know a lot of that's currency conversion stuff, stronger dollar, whatever, but that's crazy. They say it's new investments and a new business, but you just can't swing 50 billion on the bottom line and call yourself a value play. I mean, that's crazy. But down 63% over the past 5 years is also crazy. You know, like there's just a lot of craziness going on with JD. Annie Davis says that's exactly the kind of move that would be in the cards. Well, let's try to, I mean, revenue is kind of like, let's just finish this thought since we've already gone here. $187 billion. I mean, holy smokes. 187 billion in revenue. That's like 2 times Target. I'm just going to go with this on the PE, even though it seems like their E is all over the place. A 16 PE, but on a price to sales basis, 47 billion divided by the 187, you're paying a 0.25. So price to sales, you're actually paying about half as much as you would for Target. And the revenue is $80 billion more than Target. You know what I mean? Like, it's also, I think, number 2 compared to Alibaba, right? Alibaba revenue. Oh, 140 billion. Okay, so maybe JD's actually bigger than Alibaba. But look, Alibaba's way bigger from a market cap perspective. That's crazy. So we'll call it number 2. Chinese e-commerce. We'll say duh on scalable. Who knows about NOLs? Do they need money? Do you understand? 2024, 14 bill in cash. Right? 14, yeah. More like 15, 16, plus another 17 in investments is 33 billion USD in cash. And then another 8 billion in more investments, and another 8 billion in more investments. What? 33 plus 16. They've got 49 billion in straight up cash and investments. That's kind of crazy. USD. And it's, I guess, like slightly lower now after 2025. And look, they only got tiny little teensy debts. But if you add that to payables, So they don't really have large receivables on top of their payables. So they 49 bill in cash versus about 35 in effective debt. Not a huge need for cash. Assets to liabilities. Total is 96 to 53. It's a strong balance sheet. Not crazy strong. I don't know. It's probably worth a 1%, honestly. As much time as we've spent here trying to figure out why it wouldn't be worth 1%, I think it probably does have a 1% weight. Probably does. British talking about honestly, I'm going to give this like an orange because it's in China. It's not quite a deal breaker, but that to me, like I almost want to call it less than 1% because of that dynamic right there. I just don't think it's going to get sold. It's also not a crazy, it is a value play, but it's just not crazy value. Sorry, going back to the comment from British. A lot of the stores GameStop closed apparently are very close physically in proximity to Target stores. So that's something. That is something. So far, I'm still preferring Target. Maybe there's some value here with JD, but the balance sheet's not as strong. They have a lot more going on. Their earnings is super volatile, and they're based in China, which just adds a ton of geopolitical and execution risk compared to Target. Specifically, when you think about delighting the customer, like Cohen, is he prepared to delight a Chinese customer? Maybe he's been an investor in Baba since forever. But even that, it's like, well, if he's been an investor in Baba, why would he now be interested in JD? It seems like he thinks Baba is the better play. And he probably understands the differences and nuances between the two companies pretty well. So I kind of want to say less than 1% for those reasons. It probably is less than 1, but it definitely is worth the presence. Definitely is worth the presence. Let's keep going here. CoreWeave I looked at the other day, very high valuation. Roblox, RBLX. I don't think it's particularly consumer facing. It's also pre-profitability. More Coca-Cola. Here's eBay, a fan favorite. eBay, I've talked about them before. And basically, you look at here and it's like, okay, that's not a super sleepy management. You look at their PE, that's not a super discounted price. And their method of doing business is e-commerce, which is an expensive place to compete in. And they also are very, they're very global, and they have several off-platform businesses. Like there's a lot going on with eBay. Like if you listen to their most recent earnings call, which I did, there's a lot going on. You think about the tea leaves and, you know, what has happened post their earnings, post March 1st, like they're pretty much, you know, they are up 5% year to date. Somewhere mid-February, they had an inflection point. So that's, there's enough of a tea leaf there in terms of the movement of the stock. The other thing with eBay, I think I still have it down here. Oh, I don't. Okay. So let's go ahead and check out the 10K because I know people are interested in eBay. Burgess says eBay is at all-time highs. It's true. I mean, this is one of the more compelling reasons why it's probably not eBay. It's really just not very sleepy. Hard to call this a diamond in the rough. A 20 PE is a very respectable PE for the industry that it's in. Not a super high PE, but not like it's not easy to move the needle in terms of growing eBay. They're already super global and they're just like fighting for the slight revenue growth they're getting. And they're also paying for it, right? They are fighting for some growing profits, fighting for growing income from operations. Income from operations actually down year over year. It's just not like the scale of 11 billion in revenue. Like you look at all these revenue companies, it's like, okay, Caesars and Lululemon, they do 11 billion. So should I just in honor of Lulu, Caesars, and Macy's, like even Macy's is 22, but okay, Lulu and Caesars are there at 11 billion. I'm like, well, yeah, but they're on a PE basis. Like Lulu's half the price of eBay. On a dollar basis, Lulu's less than half of the market cap, so you're paying more for on a PE basis. With Caesars, you're paying what is it, 8 times as much for the market cap for the same amount of sales. So you're paying double Lulu, you're paying 8 times Caesars, and you're getting the same revenue. And the growth that's possible with Caesars and the growth that's possible with Lulu, I would argue both exceed the growth that's possible with eBay fundamentally, aside from what if collectibles and Pokemon continues to go bonanzas. But if Pokemon and graded cards go bonanzas, that's why we have GameStop. Like GameStop is already doing that. So I don't know how, like it's probably maybe worth a line item here. Maybe. But you're like the number 2 or 3 or 4 or 5 or 6 or 10. I mean, you could say the number 1 resale business, but as far as e-commerce goes, even then you're probably the number 2 resale business because more people sell through Facebook Marketplace. The growth is not obvious how they could grow. What can eBay do to grow? They don't have any NOLs. They don't need the cash, I'm pretty sure. 3 bill. Yeah, plus another 2.5, kind of 5.5 billion in cash. Okay, they could use some cash. Let's go ahead and write it out. I don't think it's eBay, but let's go ahead and write it out. 40 billion, 41. Revenue of 11 billion, price to earnings of a 21, price to sales almost a 4 on a price to sales. Like this right here is orange for show. And I guess these here are officially orange. Market cap for Caesars and Macy's just too small. Number 2, resale. We can call it number 1 if you want to skip Facebook Marketplace because Facebook doesn't monetize that. But, you know, unclear. Like, could the resale industry grow? Yes. And then eBay would grow. Like, if more people sell stuff, then eBay would grow. But I'm saying the industry of resale, what can eBay do to grow within the industry, to perform better than its peers? Like, what are the competitors to eBay? No one is competing with them, basically. There's apps for little things, sure, but like eBay already is a huge portion of the market. It's more likely that eBay would shrink and that other apps and communities and AI would come after eBay's business. That's more likely than eBay being able to grow its own top line. None on NOLs. Short percentage at 3%. So nothing exciting there. Debt to cash. Let's go ahead and do it. 6 plus 7, 8, 9 over the, what do we say, about 5.5. So they could use the cash. Not nearly as much as Target could use the cash, or Macy's, or Caesars, or Carnival. But they could use the cash-ish. A 1.6 debt to cash is not like a bad ratio, though. They're not like doing bad. 17.6 in assets against 13 in liabilities. 1.31, not the strongest balance sheet ever. Mainly, I don't know if the growth is there. I don't know if the undervalued is there. Those are the hesitations for me on eBay, but I will give it a less than 1% chance. If GameStop was growing to become the resale destination of the world, then eBay would make a lot of sense. I don't think that's Cohen's goal with eBay, or sorry, with GameStop. I also think, as far as the PSA partnership goes, that it doesn't help GameStop if GameStop is the only bona fide partner to PSA. People will begin viewing PSA as a de facto company of GameStop, which is bad. I want people to view them as separate. I don't want GameStop to be accused of artificially inflating grades that come through GameStop. If you get graded through GameStop, PSA is going to give you a better grade because everyone knows PSA and GameStop are like this. If that starts to happen, all of a sudden PSA is no longer viewed as the premier grader. And if PSA's dominance is threatened, that hurts GameStop a ton. So I don't think the synergy is as exciting as people think, personally. Look at that. We're almost to market close. Let's go. Wow. Up 3.55% on the day. Very exciting. Warrants stayed kind of flat the last hour there, up 6.6%. What is up, everyone? What is up? Orange Guy says Roblox is huge, bigger than Steam and PlayStation combined in terms of players. That's awesome. I mean, I think if they're already succeeding that well, it's hard to call it a diamond in the rough, you know? Like, I think I think it's doing great. British says, is it because you're streaming that the stock is up? Hey, that'd be fun. The inverse DFV effect. When he streams, it goes down. Just kidding. Wham Bam says he wants to take on Amazon. So maybe eBay is his way to take on Amazon. The thing is, eBay, if you're talking about Amazon, eBay's like tiny. Like you do bet if he wants to take on Amazon, he'd have a much better chance buying Target, even buying Macy's, even buying Best Buy. Like all of these revenues are much larger. eBay as an online retailer is so small. It's so small as an online retailer. And all of these other companies are companies that Amazon is the killer for. Just like GameStop was killed by Amazon. So I do think he's interested in competing in unlikely success retail spaces. That's just, to me, that's another reason why eBay is unlikely, because eBay has its own little corner of peer-to-peer resale marketplace. They don't really have any competitors. No one's fighting for that. What everyone's fighting for is the lion's share of online revenue, which is people buying new stuff from retailers, not buying old stuff from one another. So if he really wants to go against Amazon, he should play in something that Amazon competes in. Amazon's not even competing with eBay. They're like, go for it. It's a whole lot of work for not nearly as much upside, in my opinion. Chipotle, pretty sure this is still, generally speaking, overvalued. 27 PE is very high for a food company. PayPal, let's see if anything's changed here. So some acquisition rumors have come about, but nothing materialized. Tea leaves wise, nothing, since February. They are up since February, despite the market being down. Like deep lows around 39. They're up to 45 now. A PE of 8. Like it's definitely in play. I don't think they need, let me take a look at their financials again, because them not needing cash, if that's the only reason why I put them at less than 1, then I should probably put them at more than 1. Like this is probably a solid, I don't know. The main thing is payments. Is that a sticky enough customer? Can you delight the customer in payments? That's really the hard thing. And then, PayPal itself doesn't need the cash, but it probably is worth a genuine 1%. And then maybe Carnival. JD down here. Maybe JD should, geez. China payments. Like as a consumer, you use PayPal, but you don't really care that you're using PayPal, right? It's just a convenience thing. It's not an emotional attachment compared to something that's super consumer discretionary oriented. You can make the same argument for Zoom. Like there's no emotional attachment to Zoom. So I should probably lower my weight there with Zoom. Because it's not exactly something that customers come running for. I probably, Lulu, I just think it's not the industry he wants to compete in. Should I maybe give it a 1% chance? I probably I don't know. I probably should give it an official 1%, but I don't think Cohen needs to be the face of Lululemon. It just seems like a weird fit. Don't you think it's a kind of a weird fit? It deserves an honorable mention. It does. JD, I think I'm hung up on the fact that it's in China, but I want to go ahead and give that a 1% weight because it is a huge scale, just massive scale. PayPal, Carnival, I want to put up to 2%, right up there with Best Buy and Zoom. Some interesting alternative plays. We are at an 8% chance cumulatively between all of those names. Anything else that deserves to be in the mix? What about Yum? Very high for a food industry business. Not interested. Delta probably is high as well. And maybe not exactly Cohen's type. Also not exactly sleepy from a stock perspective. Kroger, groceries, similar to food packaging. Probably not the most exciting industry. Also not very sleepy. United Rentals, not exactly consumer facing. Coinbase, also not very sleepy, I'm pretty sure. Okay, actually, interesting enough. But at a 36 PE and being super tied to crypto, I think Cohen is not nearly as bullish on crypto. So if he was super bullish on crypto, this would be kind of interesting, but I don't think he is based on his comments. SE. What is C? What are you? Online gaming services. Okay. It's headquartered in Singapore and 31 PE. So probably not. More utilities. EA. Pretty sure the PE on this one is quite high. Yeah, 76 PE for EA. It's pretty crazy. Energy, and then we got Target. Here we are. Target has come up a decent amount since we first targeted Target. So now it's a $55 billion market cap. And now it is a 15 PE, meaning its price to sales is now a 0.52. All still plenty low enough. Like Target to me is the only one that doesn't have any yellow flags. So, and since we've been covering it, pretty stinking exciting. AutoZone. Not sleepy at all. And now we are on the top page. Some of these get too big pretty quick. What about Ferrari? What are the odds? I said I'm not bullish on autos, but Ferrari's a little different. Not exactly sleepy. That would be fun, though. Robinhood. I don't think. I mean, it's hard to even call this poetic. You know what I mean? Like, is it? Is it poetic? 32 PE is not crazy. Not crazy inexpensive. It's true. EA was already purchased by someone else. Peloton, I think, is not large enough. Robinhood, I just think at this PE ratio for a brokerage compared to, like, I don't know, other brokerages, it's fine. But also, is this management sleepy? You know, up 83%. It's probably not. Probably not super sleepy. DoorDash. How is DoorDash worth that much? To me, this is high risk of coming down. 70 PE. No, thank you. No, thanks. Wham Bam, I talked about that transformational quote earlier. I also talk about it in my comment section on almost every single video. Just so you know. Warner Bros. $94 PE. No thanks. Carvana. This is a stock that has run like crazy. This was the meme play that was allowed to run. CVNA and Carnival. I mean, CVNA is up, what, 20 times 3, 60 times? It's just crazy what inflation did to the used car market. It's kind of crazy. Not exactly undervalued. Not exactly. Hilton is such a, I don't know if that, a lot of global complexity there. Not a sleepy management. Ross, we looked at. Monster, MNST. And we are now at $70 billion companies. Monster, not sleepy either. Not undervalued either. There's Royal Caribbean we looked at. I think he would probably go Carnival above Royal Caribbean. Airbnb. It's still a pretty high PE. Also don't think he likes company like eBay and Airbnb both have the same issue that they are a marketplace to facilitate peer-to-peer transactions. GameStop does not facilitate peer-to-peer transactions. GameStop buys from the peer, and then GameStop sells to the other peer. So GameStop likes to control the end user experience that you can't do with Airbnb or eBay. You can try, say, hey, if you get screwed or someone sends you a bad thing, like, we'll reimburse you, no problem. But GameStop's like, no, we are going to deliver ourselves, so that we can ensure that it goes the way we want it to. O'Reilly's up crazy. Moody's. No thanks. And Nike's the last one under 80. I think he'd probably rather have Lululemon than Nike. But, you know, the chart looks horrible. It's down 60% over the past 5 years. But so are their earnings. they're still at a PE in spite of all these declines. So people are still assuming it's going to grow in a really unique way, and that it's going to turn around ultimately. And now you're at these companies that GameStop really probably just cannot afford. CrowdStrike. Not sleepy. Doesn't make money. Look at that. Holy crap. Negative 514 PE. Gotta love that. So there you go. There is the list. There is the list. I will, for kicks, include Kohl's as an honorable mention, even though I think we know enough now to know that this $2 billion is like a red flag. It's just too small. There's just no way they're going that small, in my opinion. Someone mentioned Peloton. Let's go ahead and check that out real quick again. Yeah, $2 billion, unprofitable, not going to happen. Hasbro is another popular one because it has a lot of popular brands. But again, unprofitable. So you're paying $13 billion for a company that doesn't make any money. It's just hard to say they're going to do that. They own Monopoly, they own Transformers, Play-Doh, Nerf, My Little Pony, and Magic the Gathering. I do not think that GameStop wants to own the cards. I think they want to come across as unbiased, independent as far as the cards go. I don't think they want to make the cards and then also pay to grade and resell the cards. I think if they make their own cards, that could damage GameStop's reputation as a grader of the cards. It could damage the long-term value of Magic the Gathering graded cards. I think they want to niche themselves into the marketplace of the cards, not the production of the cards. So those are some thoughts on Hasbro. What else? How we doing? We've been going for over 3 hours. I liked Wendy's as a small name, but it's just too small. I think the meme power of Wendy's is pretty nice, but it's just a $2 billion company. Beckett Cat says, I think I'm going to grow in a really unique way, or he thinks I am. I appreciate that. British Shilling says 3 hours to look through all these companies and still Target is the target. It's true. Muck says, thanks for your thoughts. Thank you. So I will, if anyone wants to talk to me about eBay, look, I officially put it on the list, okay? That's the best I can do for you. I don't think it's even worth 1%. JD PayPal probably shouldn't be 1%. PayPal is just not quite consumer enough. And JD is in China. I don't think either of these are happening. These probably should be less than 1%. But out of respect for other things that seem to make sense, I will give it a 1%. Carnival, Best Buy, and Zoom. A little bit interesting for their own reasons. Best Buy, just functionally, it's look, it's not exciting, but somehow if that store is doing 40 billion, even if it's going to come down to 25 billion, it's well, I bet they could, they could probably still have some Best Buy stores. I hope it's not Best Buy. I'd be more excited if it was Zoom and more excited if it was Carnival. Carnival would be quite the party. A high risk play. Like, it is genuinely $36 billion. So I know we like to talk about PE ratios, etc., but genuinely, you are paying 3 times as much for Carnival than you would be for Best Buy for almost half of the revenue. Now, Carnival's revenue is going up. Best Buy is coming down. Carnival long-term has probably better growth opportunities than Best Buy does. But still, like, these are real billions. You know what I mean? Zoom, similar. You're paying 23 bill for just $5 billion in revenue, and it's already highly profitable. Like, I got excited when I went through these financials because the company's actually doing a really great job. The stock hasn't appreciated it, but would people like, what about GameStop owning Zoom makes Zoom more valuable? What about Cohen and his expertise makes Zoom more valuable? Like, I just don't know. Like, it's an attractive valuation, but beyond that, I just don't know if it really makes sense for Cohen to be the one to buy it. If Microsoft wanted to buy it, that would make a lot of sense. If Cohen wanted to buy it, I'm like, but why? Why would he? What would he do? How would it be that similar to Berkshire Hathaway? How would he have operational expertise? How would he make it more efficient? Right? They're already stacking cash. They don't have any debt at all. Right? What does the capital matter if they don't have any debt at all? And how sleepy is the management team really? It might be sleepy. It could be, or it could just be like a company that is being treated predatorily by short sellers. You know, so like even Zoom, like 2% is probably rich for Zoom. It probably should be 1%, just like PayPal. I would just prefer it to be Zoom over than PayPal. You know what I mean? But yeah, I mean, is there any reason why I shouldn't? Yeah, I think this is a 1%er. I like the financials. I like the investment opportunity that is Zoom. But the same reasons, like the only reason he would go Zoom over PayPal is one, it costs half as much, 20 billion instead of 40 billion. And number two, he's more bullish on Zoom and its positioning within the video conferencing space and its profitability, etc., versus PayPal, that maybe he thinks PayPal is actually kind of like number one or two. Like maybe it's a little bit less clear if PayPal is the brand or not, right? But both of these are probably less likely than JD if you assume that Cohen has a retail bias. Now, Best Buy is probably more likely than Carnival if you assume Cohen has a retail bias. But if you think he's going after memes, then you would think Carnival's more likely than Best Buy. And this NOL and short percentage is so astronomical, and their need for cash is so desperate. And GameStop is already in the industry of Best Buy that you would think this isn't differentiated enough, whereas Carnival really would be its own separate business, which is similar to Berkshire Hathaway. Honestly, I kind of want to increase the weight to Carnival because this is a company that I could see Cohen adding value to through a disciplined approach on the balance sheet side, increased profitability, and the opportunity for higher earnings, and an opportunity for basically tax-free earnings growth, and for the multiple to go higher is all pretty high. So I might honestly give it like 5% chance it's Carnival. Most surprising takeaway from this live stream, if you're asking me. And what does that get us to? That's 10% of between Carnival, Best Buy, JD, Zoom, and PayPal. You know, less than 1% for Lululemon, eBay, Caesars, Macy's, and Kohl's. And so Target is going up from 85 to 89%. The extra 1% being totaled up between all these other odds. So there you go. There is my current breakdown of what I think is the most likely. In my opinion, Target is still the target. I think the Carnival is such a different business that it might be like, I don't know if that's what Cohen wants to bite off. Target, I'm pretty stinking sure that Cohen knows what to freaking do to make this entity crush compared to all these others. I just think it's a better fit. So maybe I'll go down to, if I go 4% here and make that around 90, there you go. 90% Target. I'm feeling more confident than I ever have. But I could totally be wrong. What do y'all think? People wanting to buy Discord. We've already talked about SoFi. What's up? What's up? SoFi I've talked about. Webull I haven't looked at. Some people mentioned that. Geez. I mean, that's a disgusting looking chart. Doesn't make any money. It's only $2 billion. Too small, too unprofitable. No thanks. I've already talked about SoFi. People like how the Wendy's chart is looking. Yeah, Wendy's I think also is just too small. But I did like it in one of my earlier live streams. I thought it's kind of a fun option. People want to know how GameStop could acquire Target. It's basically just they award Target shareholders percentage equity. So you could do some research on a reverse merger. But yes, a company with $10 billion in cash that they then leverage, that they also raise debt and also sell equity, and then dilute and then award some shares to the company that's being purchased. Like definitely they can. That's the simplest way I can explain it. Discord's not publicly traded, right? And I don't know why Ryan Cohen would want to own Discord. It is not. They filed for an IPO. So they will. But if they're just now IPOing, how is that a diamond in the rough? You know, how is that a sleepy management team? It's just probably not. Yeah, we talked about, I looked at Dollar General. It's just not deeply undervalued, but I probably could have given it a little bit better shake. Like it probably deserves an honorable mention, you know, at a 17 PE. It's probably worth a look. But they've also been like, I don't know, they've been flipping into like DG markets, like they've been opening a new type of store. I also think like grocery store in general, like you're not going to get a high PE because you don't control your margins. I think Cohen would rather sell things that he can sell for a high profit margin. I think that's exactly what he doesn't like about GameStop's hardware business. Target, they don't compete on price. They sell their groceries for whatever they want to. You know, like no one shops at Target to save money on groceries. People shop at Dollar General to save money. And some for the convenience, of course, etc. But I don't know if there's, you know, hypothetically, I probably should give it a less than 1% chance, but I don't think it's a name that excites people as far as kind of the retail focus. Is it potentially a meme play? I don't think they have any short NOLs. And even growth scalability, like they're already investing a lot. So I don't know. This is just in 15 years, they've gone up 5x. You know, they got a little overheated, obviously, in 2022, but still, they're, I don't know if they're really sleepy enough. What else? What else? Yeah, if he wants to buy IEP and connect to Carl Icahn, he could. It's quite possible. I mean, I should probably like put that here as like a, almost like down here, like I don't know. To me, the brands that Carl Icahn owns, it just doesn't seem like Cohen wants his business. Just because he tweeted a picture with Carl Icahn 4 years ago, it doesn't mean like, oh, he really wants to own Pep Boys and like a couple other random companies. Like, I don't know. And it's an unprofitable company, and it's also not that big. Like, I just think IEP would love if Cohen bought it. I don't know if Cohen would love buying IEP. You know? Some people talking about Five Below, or maybe they're just talking more about Dollar General. Some people really want to talk about Dollar General. Y'all want me to dive deeper into Dollar General? I'm trying to get out of here. I'm trying to get out of here. To be clear, all of this stuff I'm doing, this isn't about what I think is a good business. I feel like a lot of y'all, when you think about GameStop, who are the acquisition targets, etc., you're mainly just thinking, what would be epic? Like, what would be a great business for GameStop to buy? I'm thinking, what has Cohen communicated? What fits the criteria? So it's a little bit different of a framework. Okay, their assets are down a little bit. Liabilities, there you go. Cash, 1.1. 1.1 in cash. Is that it? Leases, good. Yeah, they're cash poor. They got 31 billion in assets and only 1.1 of that is cash. That is not good. Not even any receivables. Holy smokes. Well, the payables are offset by their inventory. Long-term obligations are hopefully tied to, lease assets and property. They don't actually have a ton of debt, it doesn't look like. No debt. I don't think they have any debt. 8.5 billion in stockholders' equity, aka book value. Sales up less than 10% year over year, but they're growing. Costs are also growing, but gross profit, decent growth there. SG&A coming up pretty aggressively. So their operating profit in 2026 or in 2025 is actually lower than their operating profit in 2023. They are less profitable now than they were 2 years ago. Okay, they do have interest expense. So some of these obligations are debt. Maybe that is primarily debt and not related to lease stuff. Or maybe they're having to pay a little bit of interest on accounts payable. But if they have 1.1 in cash and 4.5 in debt, you know, they could use some cash. But operating, like, well, how durable is Dollar General really? If their operating profits come down in the past 2 years, when you know what's happened in the past 2 years, no one can buy anything. In the past 2 years, people that never stepped foot in a Dollar General in their life step foot in Dollar General. You know what I mean? Like, this is when Dollar General should be crushing, and they're actually doing worse. So what happens when everyone's making money? When AI is doing its thing? Like, do you really want to be Dollar General? Why wouldn't you want to be Walmart? Like, when you think about durability, like, what is Dollar General? It's not the number one low cost grocer. It's not. You can get groceries for cheaper at Aldi. You can get groceries cheaper at Costco. I've price shopped all this before. Number one gas station convenience? It's like, it's not. They don't have gas stations. So is it the number one convenience store? I don't know. I'd have to look at the revenue that like Exxon and Chevron and all of them are doing from their convenience stores. But even if you were number one, and then you also have like Walgreens and CVX, and like there's lots of, if the only value that Dollar General has is we will be in the corner closest to you, that's not really brand power. That's not delighting the customer. It's just like, it's the same as a gas station. It's just like, well, whatever's by my house. It's like, okay, that's not like compelling. I don't think the moat's that impressive. So I don't even think it's worth a less than 1% to me. But it doesn't mean it's a bad business. But it's not exciting. Like, oh man, you can get a 17 PE, spend 26 bill on a company that makes less than it used to a year and 2 years ago. Or more, it makes more than it makes a year ago, but less than 2 years ago. I don't know. Is that exciting to you guys? It's not exciting to me. I don't want to compete against Walmart in Walmart's wheelhouse. I don't want to be a low-cost provider in a Walmart world or in an Amazon world. Like, I don't want the reason why people would go here because they think they're going to save money. In a Costco world, it's just tough. It's tough. GameStop, you can get stuff low cost because you can buy used. And you can buy stuff full price if you want. Because it's not a low cost general store. It's a video game store. Sean says, get this man a beer. His day's over. British says, reverse merger into Target is very compelling to reframe GameStop as an entire business. Breadcrumbs are all there. Watching and waiting. Exciting times. Night Cow says, because nothing in there is worth $1. It's $4 to $5. Exactly. You named yourself Dollar General, and then everything is more than $1. It's just like, oh, this isn't even a dollar store. Dollar stores don't exist anymore. It's not like I wouldn't want to call myself a dollar store and then sell stuff for $5 and be like, yeah, just get over it. Like, that's not delighting the customer. You know what I mean? What's up, Miller? He says, yo, it's you again. Beckett says, that's it, boys. We're buying an oil rig. But he was joking. Exciting stuff. I still think it's Target. And if it is Target, I'm going to wait. I'm going to wait until we know. Okay. But if one day we find out it's Target, I will be going through my old comments on old videos when people were calling me an idiot and reading your comments for the world. And also, I'm pretty sure one of y'all owes me some steak money. I'm pretty sure another one of y'all is going to buy a wallet from me. And maybe some of y'all will give me a tip of the cap and finally, sub to the channel or something like that. Appreciate you guys. I'm not going to rub it in anyone's faces, but tell you what, when I made this video on February 2nd saying, hey, I think I know who GameStop is acquiring. Where is it? Right here. Some of you guys thought I was so full of crap. And if this ends up being the name that GameStop ends up acquiring, then I just lost my train of thought. That's what you get for streaming for 4 hours straight. I don't even know nothing will happen, but I'm just saying it'd be pretty epic. That's all I'm really saying. I would have a fun time being right. I also will have a fun time if I am wrong and Cohen is right and stock goes to the moon. Jay Card says, right or wrong, tip of the hat for everything you share. Thank you. Andrew says, I hope it's Target, but I think it's too good to be true. Could be. Only Dad says you would be a goat in my book. Oh, that's what I was going to say. If it ends up being Target, everyone's going to be like, look, it's Target, just like we all thought. Everyone on X and on Reddit, everyone's kind of coming around to the idea that, it sure seems to be a lot of things that line up with Target that doesn't seem to line up with it. Everyone's going to be like, look, we were all right. It's Target. And I will be here to say, no, I was right. And then everyone else realized and started copying my work. Okay. Just kidding. We're all in this together. And there are other people that have read tea leaves and connected dots that I did not as it relates to Target. But I was. Don't let anyone trick you guys on the internet. Okay. I was absolutely the first. I was first. That's for sure. So we're all in this together, but I was first. And I could be wrong also. So that's why I'm going to wait until we find out. And we might not find out till June or something. But man, it would be fun. It'd be fun. Andrew Webb says, thanks for the stream and discussion. Thank you. Thanks for being here. Jay Card, thank you, man. Ending on a super. What a fun blessing. Thanks, man. He says, coffee on me. How did you know that I like coffee? How did you know that? Thank you, Jay Card. I will enjoy that. Love it. Sean says, you deserve it for all the work you put in. Thanks, Sean. Appreciate you guys. I should get going, try to accomplish something else in my work day before my day is over. Rod Air Burger says, I remember the moment you read the revenue on Target for the first time. Yeah, eye-popping. When you think about revenue, it's like, oh, put eBay and Zoom and Carnival and Caesars and Macy's and Kohl's all together. And then you get one Target. You know what I mean? Like, pretty wild to think about the scale that Target's competing at. It's just next level. Or do any mix and match of whatever one you want. Just don't put JD in there because their revenue is insane. Another super. Hey, British. Hey, he says coffee in a mug. Thank you, Brit. Thank you guys for the supers. So kind of you. Only Dad says this is one of my favorite educational channels. Have a good day. I will, sir. I will. I'm so, just June can't get here soon enough. Soon, in a video soon, we need to talk power packs. I want to follow up on video I made related to some tracking and balance sheet numbers. And some people in the comments of that video wanted to understand some of these numbers a little bit deeper. So we will do that and do some tracking. I last updated on March 17th. So I'm very excited to see what are the Q1 numbers looking like as of 2/3 of the way through Q1, right? February and March. So we'll be able to see the updated number once we track that together, and hopefully start to have a decent feel on what the number is going to be. So anyways, some more content coming. Solid Squeeze says, Jeremy, was it difficult understanding all the target locations to show at GameStop? I was pumped. I had a hard time falling asleep that night. I was like, let's go. Super exciting for me. So anyways, but then I think doused the flames a little bit when it was happening with Walmart also. So maybe there's nothing really there with that, but if there is, then cool. Y'all have a good day. Appreciate you guys. That's all I got for y'all. As far as GameStop's consumer companies, there's the list. There it is. Target. But give me a couple chips on Carnival, a couple chips on Best Buy and Zoom, maybe a little chip on PayPal, and some nods of appreciation for Lulu and eBay, which had not gotten any love on my channel beforehand. That's all I got for today. I will see you in the next one.